Thanks for tuning in to Q4 with Bloomberg Quint. Motherson Sumi Systems reported very healthy top-line growth. Overall, a mixed quarter because on a consolidated basis, top-line growth of the quarter was ahead of most estimates. Margins maybe came in a bit lower, but the order inflow seems to be robust as well. Let's get in Vivek Chand Sehgal to talk about, well, yes, this quarter, but more about what's happening to this whole global industry because they are such a dominant player in that. Mr. Sehgal, good having you. Thanks so much for taking the time out. First, let's get the quarter out of the way. How do you sum up the performance? Because the top-line numbers seem fairly healthy, ahead of most estimates in a scenario or an environment wherein things are looking pretty shaky.
I would not say so. I think, you have to look at this quarter as a work-in-progress quarter. The consolidated revenues are up 12 years on year to year. But I think what is important is two brand new plants of ours are now right in the midst of high startup and things like that. And their adverse costs are probably pulling the S&P numbers down a bit. We also have a brownfield expansion where they're going to grow 6 times. In the next 3 to 6 months. So we have those challenges, but yet I think what is really noteworthy and an amazing effort by the people at Motherson is that we have the highest net free cash that we have generated. Just tells you once these 3 plants are out of the way, you watch, the numbers are going to be phenomenal. Our net debt is at the lowest ever for the whole year. We have new order book, as you referred to it, to 1,47,000 crores, and this is despite us removing almost about 7 billion or 55,000 crores, which was the Daimler and things which are there in Tuscaloosa and Kashkamed since we've started billing. So true to our this thing, we've taken it out, and yet we are reporting a 18.2 billion euros order book. So phenomenal performance on the marketing side to get that. And I think one very important thing that you should consider is that these are all the new models. These are all Euro 6 compliant. They're all WLTP compliant. So 3 months, 6 months from now, these are the cars that will be selling phenomenally well because they absolutely take care of all the unevenness which is there in the global conditions at the moment.
Okay, so let's dwell on that, and I'll split this into two, both global and local. Now, if I look at the global business, Mr. Sehgal, order inflow looks solid. The revenue numbers for Q4 as well look okay. The margin performance, maybe due to the factors that you alluded to, is not. What do you think happens over the course of the next 4 quarters? I'm guessing it's difficult to look beyond that right now.
Yeah, I think the next 2 quarters are definitely challenging for 1 or 2 companies. But overall, I mean, if you look at PKC, you look at MWSI, you look at the standalone wiring harness and all these particular businesses, they're doing very well. And yes, in some pockets in India, there might be a little bit of a challenge, but that's okay. It's part of life. You can't have incessant growth happening all the time. So overall, we are very, very happy with the situation. Could be much better, but nothing to really, as you said, shaky. We are not shaky. We are
okay.
Very, very strong.
No, I was referring to the situation looking shaky, and I would want your thoughts out there to Mr. Sehgal. Just a couple of company-specific questions, though, first.
Sure,
the S&P margins having come off, you reckon, as you alluded to, only because of the fact that new plants are operational, and will that change in the quarters ahead?
I think the next quarter could be still the same because in 2 of the plants, they're going to double up. So just think about it, whatever they're doing today, they're going to double up. So to put that entire thing in action together and for the car maker to have over 200 component suppliers all adjusting to each other, it's always an interesting situation to have.
Okay. And the new plants in North America, Mr. Sehgal, fully operational, what's the kind of contribution can we expect from them?
So, as we had alluded to before, they're going to add about $1 billion in top line to the group. So they're substantial, and for a company, it's also very, very substantial. That's almost about 33% growth in that company.
But they're fully operational.
Yeah, at the moment they're operational, yes.
Okay, yeah.
They're all operational. Yeah.
All operational, okay. You've been a very busy company, Mr. Sehgal. String of pearl acquisitions, sometimes very large acquisitions, distressed plays, and organic growth as well. Has large capex, because of the pace at which you expanded, coming to a bit of a rest for FY20 as a year, or would you continue to remain busy, if I can use that term?
No, we will be busy, absolutely busy, because the gap of 12 plus billion to 18 billion is going to be through acquisitions only. So very clear on that. We believe that the target that has been set by the company is very relevant, and we have all the indications that we will achieve it before the year ends. The more the confusion outside, that many more opportunities Motherson gets. And we have a head on our shoulder, so we won't lose it just for the top line. As you remember, Motherson is always following Nimish Bhai on that, which is top line vanity, bottom line sanity, and cash and bank reality.
Yeah, and focus, incessant focus on ROAS, as you always say. Just one question on the domestic business as well. That probably hasn't done well, and I won't blame you for it. The domestic auto market is looking that wobbly. How do you expect FY20 to be?
I think it will come out very fine. If you deep dive into the numbers, see, automotive cars are not. We're not selling something which is consistent, same thing being sold. So the numbers we start to worry about. I think if you deep dive into the companies and all that, you will see that the value per car number has gone up substantially. So maybe a small dip in the numbers of the vehicle, but those are the vehicles which are not selling, and I don't think they will sell. So what is selling is of a much higher value. So that's encouraging, very encouraging. Always, whenever we see value per car going up as the largest selling cars and things like that, we are always encouraged by that.
So would it be safe to assume, Mr. Sehgal, that FY20 could be a year wherein, because of the second half performance, SMP plants will start operating at higher capacity, better margins improve, all of that, that FY20 could be a year wherein your top line growth will grow the way you would probably guide to, but because of some margin expansion coming into play as well, the bottom line growth could be faster than what the top line growth would be?
Definitely, we are going to put all our efforts towards that. You see, last quarter we had talked to your people, and we had said that our focus is going to be ROAS, our focus is going to be free cash, our focus is going to be to reduce the net debt. So all these particular things we've started to guide you. If the acquisitions happen at the right price, where Motherson thinks it's a good place to get into that particular business, you will see that we will achieve our targets with a 40% ROAS, kind of a trend line, which would be showing you 40% ROAS. I think all the companies which we have taken over are doing phenomenally well. Take PKC, for example. PKC, when we bought, everybody was a bit concerned because we had paid a huge amount for that company. But just look at the performance in less than a year and a half. It tells you that we are vindicated, that it is the right place to do, it is the right thing to do, and the company is doing phenomenally well.
Yeah, which is I was wondering, because FY18, FY19, due to a lot of other reasons and maybe some accounting reasons, haven't shown that 40% trend line growth in the bottom line at least. You reckon FY20 or FY19 could well veer towards that number, Mr. Sehgal?
Yeah, I think the accounting standards have changed.
Yes.
So that also takes away a bit from what Motherson has already achieved. And that's a significant number. But that's all part of life, So I can't say, oh, because of that our number is down, because of that the number is down. But, all across the board, all the 271 manufacturing plants that we have globally are doing their utmost to focus on the numbers of March 2020. So I have no doubt my teams are very, very focused on that. And you will see a very robust set of numbers coming, either way, whether we hit the top line or we don't.
That's very heartening to hear. Mr. Sehgal, just last couple of questions on this whole global situation. Two, one, the global trade war, as we call it, and that largely impacting trade at large, and plus almost every other day we hear an auto company or two speaking about some concerns that could be coming up here and there. You are in the best seat to judge that. How are things looking?
Definitely whatever my peers are saying and whatever my customers are saying, they're right. They have much more visibility than we on that particular company per se. But I think the key point to remember for your viewers is, if the business is going good, Motherson is doing very well. If for any reason, whatever my peers and my customers are saying is true, then the opportunities for me increase dramatically. So, you have to be in that kind of a position, whether the headwind or it's a tailwind, you have to do well, because that's what the shareholders and the stakeholders want from us. So we do that. We focus on that.
Okay, so you're saying that yes, the situation is maybe a bit grim, but if anything, it would be it will actually turn out to be better for you.
Yeah, because acquisitions become that much cheaper.
Okay.
And also possible.
Okay, but last question, last question, Mr. Sehgal. Client spends, if they come off, won't that have an impact? Do any of your large key clients talk about spending coming off at large? Maybe not with you, but in general with the slowdown that they are facing?
Sorry, the funding. What do you mean by funding?
No, spending.
Spending. Spending means of the global customers, or? Yes,
your global customers. Do they talk about lower spending? If not necessarily only with you, then, or if not with you, then with some of the other vendors that they have. But is the general slowdown resulting in customers or clients talking about lower spending?
No, I think basically what's very important to note is that if you deep dive into the numbers, which we have, we found that the upper end cars and all that, there is a waiting list. And yes, the cars which are at the probably at the starting point, the starting entry-level cars and things like that, probably there you will find a lot of this thing. So if the banking, the funding, and all that particular thing is improved, because those are the people who need that kind of help. So I'm sure the governments all over the world are looking at it, and the interest costs are at the lowest level, but a little bit help over there would then grow that market. And once that market grows, it's going to be huge numbers as a percentage. That's our feeling. Okay, well, we wish you all the best for that and more. Thanks so much, Mr. Sehgal, for joining in, and look forward to talking to you more often. Thanks for speaking to Bloomberg today. Look forward. Thank you so much. That's Thank you so much for having me. Confident Mr. Vivek Chand Sehgal of Motherson Sumi about what FY20 will hold in store for the company. Thanks so much for tuning into this broadcast.